All right, good afternoon, everybody. How's it hanging? What's up? What's up? What's up? What's up? All right, good to see you guys. Let's start with the disclosure. Today is Tuesday, December 12th, 2023. I don't know why that's funny, Pat. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I kept a little bit of HCP tonight. Nothing else has changed. I've been trading that HCP almost every day, but I keep getting decent moves and closing out my position into the close, and this time I kept a little bit. Cool, let's hop over to the videotape. SPY's up 0.5% at the end of the day here. Q's up 0.9%, so that's where your outperformance is, and the IWM flat negative basically, so down small for the Russell today. So yeah, we didn't get that real good rotation that I was kind of looking for, but overall this market survived the CPI. Pre-market price action is pretty straightforward. We dipped early and we grinded up all day. I want to look at this real quick in conjunction with the pre-market price action. So CPI came in exactly in line. There were no surprises on the upside or the downside. Initially, we upticked real quick and then we were trading lower. When the market opened, we had this quick dip for about 10-15 minutes. We rallied back up, and eventually we were able to kind of recapture that starting point for this market, which is about 463 or so. And then we just continued into this upside grind. So, we survived the CPI relatively unscathed and just allowed the market to be the market and kind of continue higher. The bulls are running out of opportunity to bring this market back down. We have the Bears are running out of opportunity to bring this market back down. We have PPI tomorrow morning, which may be important, and we've got the Fed obviously tomorrow as well, which also will probably be important for the market. We'll see. I've been thinking that this Fed event is going to be a non-event, and with the number coming in line today, I think it especially makes the Fed a non-event. But we'll see what the language looks like, how dovish or how bullish or how bearish or how hawkish it actually looks. So it'll be interesting. I know you got some market participants that are really starting to think that we might see relatively early Fed cuts next year. I've been more thinking mid next year, but maybe we can get a little bit more clarity from that tomorrow. And then the day after a Fed day is oftentimes a trend day. So I really think that the Bears have just a couple more real opportunities here to bring things down. Otherwise, we're really solidifying this bull market into the end of the year here. We've just been so strong. Just going to this upside grind like we went into today. This market has just been so strong. Today was, depending on how you want to look at it, either a day 3 or a day 4. Really a day 3 since the breakout, third day of trading since we broke out, but really a day 4 up in a row. But what we discussed in the morning meeting was that we were in a little bit of a tricky spot because, yeah, we're on like a day 3, day 4, and initially the CPI reaction wasn't great, but there was no real extension to speak of that would make you confident in looking for the short side of the market. That short-term tactical has not been in the red zone or the green zone for quite some time, probably since mid-November. So I didn't think that we had a strong environment for trading today, to be honest, from a big picture market perspective. The shorts just felt like you could really get blown out if this market wants to continue higher because we don't have the extension for it. But the longs to me felt a little bit late at this point with today's trading session, considering that we broke out 2 days ago. But the bulls still kind of won the battle today and continued higher. But the IWM was relatively weak, notably relatively weak. We discussed the IWM inside day yesterday. to see if that could break up or if that could break down. Is the YouTube given like is it very unclear in the YouTube? Is it very shadowy for some reason? It's really weird. I didn't do anything different today. Anyway, I just have to push on because I have no idea how to fix that. The IWM actually broke the inside day to the downside early this morning and retested this 80 MA on the daily again. I actually think that one of the best calls of the day was calling out the long off the third 5-minute bar low in the IWM. And the reason why I think that was a really good call was just because we've seen this pattern happen a lot, specifically in the Russell. 3 heavy 5-minute bars of selling that lead to a degree of extension where you said to yourself, or at least I say to myself, wow, I'd like to look for the extension long at a certain point in the IWM because, at this point it's, 9:45 or so, and we should be able to get at least a 5-minute correction to the 80 MA relatively soon, and the rest of the market seems like it's acting okay. But what we correctly called out, even at lows, is with this pattern, we've seen this a lot. The market's not just snapping back to the 80 MA and making a lower high, and then that leads to a lower low. It's actually been pretty consistent on this intraday reversal off that snapback after 3 heavy red bars of selling. I'm sure that that'll change at a certain point, so definitely take that with a big grain of salt. There will be a day where the IWM sells early, bounces, makes a lower high, and then makes a lower low and has a really weak trending down day. But that's not been the recent pattern. The recent pattern has basically been exactly this price action. We snap back to the equilibrium area on the 5-minute chart. We tried to create a pivot, but that led to a quick higher low, which led to a wedge in this equilibrium zone into the 80 MA on the 15, and then the wedge kind of breaks up. And from that point, the price action got a little bit sloppy, and the IWM was a little bit relatively weak, but overall held in just fine, and obviously no new lows came in. So for me, I think that the Russell, even though it was relatively weak, it still looks great up here, building on a nice bull flag. This 80 MA is catching up. SPYs gave continuation of their breakout. The Qs gave great continuation of their breakout. Look at this. We're almost at QQQ 400. It's just been an incredibly, incredibly strong market. So we'll see if the bears can pull us down. We'll see if Jerome Powell can pull us down. But otherwise, the thought process of this upside grind into the end of the year already seems like it's actually been playing out. So just a really strong market. It's been really hard to short, especially trying to short any strength has been really hard. You got to really pick your spots on that. So yeah, great call there, I think, for the IWM long. The other really good call we had in the morning meeting was basically buying big cap tech versus yesterday's low. I was a little bit nervous about this trade because I wasn't sure if there was going to be continued weakness or continued rotation stemming from the NASDAQ rebalance, which I guess is happening at the end of this week, but the information came out over the weekend, so that gets front run, and that's why the market traded so strangely yesterday. That's what we thought. That's what we thought the situation was yesterday. We just didn't actually have the data, and the data came out this morning that basically showed us that it's exactly what we thought. It was just the NASDAQ rebalance created that weakness. So I likened this morning the opportunity of buying a gap down versus yesterday's low for any of big cap tech, because we have those tails in most of those names, very similar. And Apple's probably not the best example because Apple had a gap up this day. But back here on December 4th, we had this downside tail, this downside pivot for the NASDAQ. And then the next day, almost all of the big cap tech stocks, with the exception of Apple, which happens to be the one that I have up on my chart, gap down also. So I really like that from a risk-reward perspective because that gap down is letting you get in stock at a better risk-reward versus yesterday's low than if we just gapped up. And if that's going to be the pivot that holds, and that's the higher low that holds, it makes for a really good opportunity from a risk-reward perspective. So that trade worked across the board. Again, I was a little bit nervous about it just because of what caused yesterday's candle with a lot of those names, the rebalance, if that continued to push through today. But at the end of the day, that trade worked great. Apple, if anybody got stock versus yesterday's low, I was in the trade. I was light, but I made a few dollars in it. Amazon was the same thing. You have to pay up a little bit more on Amazon. I also had this one. I was light, but made a couple dollars in it and closed the position by the close. Google was the same thing. Google was the one that actually was more difficult because it broke through yesterday's low real briefly and then snapped right back. Microsoft worked really well. We talked about that one. You had to pay up a bit. Meta was actually probably another one of the better ones. So that was all pretty good stuff. We ended up kind of finding and calling out some really good trades. I mean, we called out the top in Boeing today. I remember Dimitri mentioned he wanted to look at this thing into the 250 area. And then in real time, I happened to type up the stock, or maybe we were chatting about it in the VTF. I don't exactly remember. And you saw this higher volume poke through here of 250, and then this red bar that was immediately negating it and coming back down. And when I typed it up, you still could have gotten stock just below 250 versus highs. So 50, 60 cents risk or so isn't great, not terrible when your daily chart ADMA is still all the way down at 240. So there's a lot of reward potential there. You have to have a lot of patience with that. I think Dimitri was involved in it, which is great, and it was his idea, and he was patient, and I think he got paid on it, which is awesome. But it didn't really do much for like an hour after the signal, and then eventually it kind of rolled down a little bit also. So that wasn't that bad. Kind of called the AMD area of the top also. Even as I called kind of the Boeing one, pretty perfectly, or at least we did as a team, and AMD, I know for myself, I think I said out loud, I honestly don't remember if I wrote it into the chat or if I just said it directly to Josh here on the desk, which I know doesn't help anybody. But at 11:15 here, I was saying I think that this AMD short opportunity is actually about to really start coming in. 5 minutes later is basically the high. I didn't take either of those trades though. I don't really want those trades. I don't want that hard money right now, to be honest. I think that's still really hard money. The Boeing one I actually think was probably a little bit better because it was a very clear volume signal with that breakthrough of the level and then the immediate negation of it. But generally, I've been trying to avoid this harder money, and I said it to, I think, Pat last night over a beverage, talking about the money I made in a firm yesterday. And I think I almost said, and I'll stand by this, I would almost rather just give the money back. Like, I don't really want this Affirm P&L because it's just hard trading. You can make money in it if you're super disciplined. I would rather just still be sitting on a long from $27 in Affirm from the breakaway gap because the opportunity was clearly there. 27 is a very clear, obvious level if you're paying attention to it. The low of the day is $27.05. The volume probably came in right away off that morning, and still be holding some at $42 yesterday, trying to decide if I should be booking profit or holding the position or trailing the position. And that's a good problem to have. I think that's easier money than trying to short like we did yesterday, even if it was successful. So yeah, I think that pretty much covers it. The failed trade of the day was definitely this Carvana. I also think it was traded well and managed well overall from us as a team as far as our communication went. We were looking at Carvana for the inside day and up. I cheated on my entry, which I communicated to you guys. I bought early because the volume looked so good right away. I was like, wow, the real trigger here should be like $41, but I think I upticked like 40, 70 something maybe, so I was able to get a nice jump start on that. It was trading very thin, but the volume was there. Gave a move all the way up to $42. If you're just giving it to the low of the day, $40.16. You had to pay up a decent amount of risk for a $40 stock, but we knew the name could potentially squeeze and run, and the daily chart looked really good. But at the same time, even in the first 5 minutes when Carvana was trying to rip, it seemed like every growth stock was just getting sold. And it was like, oh man, like is this thing going to be able to hold up if every growth stock is getting sold? And then I said at a certain point when this thing pulled back below 41, but was still holding in a little bit, just be careful if this thing breaks lows, because I think if it fails, it's probably going to be a very violent failure. I think that was like literally what I said word for word. And it was accurate. Why was it such a violent failure? Because there was so much volume in this first 5 minutes of the day. So everyone that bought is then out of the money, and people are puking out their stock, and the stock was also trading pretty thin. You know, not even just the first 5 minutes of the day, probably the first 25 minutes of the day, the stock was trading really thin. So they puked this thing out really hard, really fast when it failed. So I hope nobody got too caught in that. And if you really managed it properly, depending on how greedy you were on the trade, you should be at least break even on it, as long as your execution was okay, and if you were involved in it, because it gave a pretty big move in a short period of time. If you had decent execution, you should have been able to get your risk covered versus that low. We gave the warning that this thing could be very violent on a failure, so it's like an extra risk warning to make sure, have your stop out, whatever you need to do, and then yeah, it failed very violently. So that, I think, pretty much sums up the day. For a day where the main part of the game plan was, hey, we probably should be a little bit more hands off today because the market's not reacting well, at least pre-market when we're doing our meeting, to the CPI, and it's a day 4 to the upside, but it's not really a great shorting opportunity. So for a day that was meant to be a hands off kind of day, there was some okay trading opportunities out there on both sides of the market. You just need to be a little bit patient, and honestly, probably none of them were worthy of maximum risk or maximum size or anything like that. But if you approach the market a little more relaxed, a little more hands off, picked your spots, there was some money to be made. So I hope everyone had an okay day, and that's all I've got. I'm happy to answer any questions that you guys have. From Dave S. here in the VTF. Would you mind taking a look at the Russell 5-minute chart again and walking me through where the entry is and what the risk reward of the trade would be? Sure. That first green 5-minute candle just looks really wide to use it, as it would be slightly more than my 50-cent max risk. Sure. So IWM sells off really violently for the first 3 5-minute bars of the day. It was really within this third bar that the long was called out. I'm pretty sure I called it out even before the bar closed. And it's because of the candle, and you could have waited for it to close, but it was because of the tail that was being formed with the amount of extension from the ADMA on the 5-minute, alongside of this consistent pattern that we've seen where this oversold bounce, which has been consistently more than just an oversold bounce, comes in after the first 5-minute bar. So really the execution, you didn't need to wait for this bar. You could have executed at least the second that if not even a little bit before this, you could have executed your long just as soon as the third 5-minute bar closed. So the close of that candle is 185.44. The low of that candle is 185.33. So really 12 cents risk on that, which is pretty good. I would not like this trade if you were waiting for the break of the high of this 5-minute candle or something like that. That's not what the trade is. The trade is really long versus the potential pivot low, given that it's a third bar down and given the extension there. That's the risk. The reward is really just to move to equilibrium, because it's a counter trend or counter momentum style trade. So your first part of equilibrium is the ADMA. That's all the way up here at, I don't know, let's call it 186.20. So that's I don't know, 90 cents worth of risk for your 13 cents worth of reward. Target number 2 is the 21 EMA, which is closer to 186.70 or so. So that's fantastic. And then you could have kept some stock just in case that retracement higher actually becomes a reversal higher, which we were discussing even at the time of the entry, that's actually been the consistent trade that we've seen in this market a lot off the first 15 minutes of selling in the IWM. It's a very specific trade that I've noticed that's been happening a lot, but what you need is the SPYs and the Qs to be holding in. So when you have and I get, the SPYs I know sold a little bit here, but they were definitely stronger, and the Qs barely sold at all in the beginning of the day. So when you have this massive underperformance from the IWM or outperformance from the SPYs or the Qs, there is a correlation between them. They usually do trade together to some degree. You usually don't see, though we have seen this happen a few times, you usually don't see just a, massive sell day in one index with the other indices trading straight up. Usually it's like the relatively weak index maybe goes sideways all day, kind of like the IWM actually did, versus the SPYs and Qs being relatively strong and continuing higher, or the opposite. The Qs are going sideways all day, and they're ripping the IWM higher. We've seen that also. So, yeah, it's the trade. So at the start of the 945 candle, you go long versus lows because you can use the wick down from the previous candle as a level to put a stop against, and that's how you manage risk. Yeah. Candlestick analysis, right? We all know like what a hammer stands for, right? A hammer, when you get that big downside tail, the low point of the tail is a spot where buyers took control from sellers, and even though in that scenario it's a counter trend trade, the idea is that the buyers who have just regained control at lows can maintain control for a period of time. That period of time is usually represented as a price or time correction to the ADMA on that time frame, to the equilibrium area on that time frame, that kind of zone. So that's what a hammer is. This candle's a little bit sloppier. It's more like a spinning top doji. A spinning top doji also represents indecision or change, but it's not necessarily as straightforward as a hammer, right? When you're analyzing this candle here, it's like, all right, sellers were in control in the beginning of the candle. They drove it down to lows. I don't remember exactly how this candle formed. Then buyers came in at lows and they drove it all the way up to highs, but sellers are still present, so they drove it down to the closing price. So buyers and sellers are there kind of having a battle, as opposed to the first two 5-minute bars, which is just straight seller control. So, kind of represents indecision or potentially change. Buyers are representing themselves, but the sellers are still there. So, it's not as straightforward or as clean necessarily as just like a hammer candlestick that says, all right, buyers regain control at lows, and now let's look for the snapback to equilibrium through price or time. But it is representing a potential change of character. And when you couple that with what Mike Reed is saying, the spot on the daily chart, if you couple that with the extension on the 5-minute chart, then you could say to yourself, hey, I think I could have a good risk reward here to look to see if I get that bounce back trade, is really what it comes down to. So thanks, Dave, and thanks, Mike. If you got the fill at the open of the 945 candle, you would have sold half by 946. Okay, cool. Risk covered fast. From Cyril on the YouTube, today was tricky, the grind after the initial 5-minute sell-off. Yeah, I agree. I agree with you. I think today was a little bit tricky. The CPI was definitely not bearish, but you could make the argument that it wasn't bullish either. Directly inline number. I do think that an inline number right now will err to the side of the bulls, just because the underlying dynamic and trend of this market is bullish. So you need something that the bears can actually grab hold of to be able to bring us down. So at the end of the day, I'm not surprised at all to see that, we closed well and gave this day 4 or day 3 in the SPYs and the Qs. But that doesn't change the thought process that I think was still the correct thought process that I represented to everyone in the morning meeting, that today is probably a little bit more of a hands-off trading session. Second part of your question, what is the best scenario for bulls and worst scenario, assuming tomorrow the rate is unchanged, but the forward look is continue without rate cuts? Best scenario for bulls is that the Fed comes out and says, hey, the economy is humming along better than we expected, but the job situation has moderated in a way where we're no longer worried about wage spirals or anything like that. Yet at the same time, we think that inflation is going to continue to go down, and based on that, it might be appropriate for there to, be maintenance cuts. I'm sure you won't say it with that direct language. Maintenance cuts in, the first half of 2024. That's the most bullish scenario that could possibly happen, I think, for stocks. And obviously we've come up a lot, but that doesn't mean that the market can't continue to go higher. The bearish situation for tomorrow is we saw a lot, and it actually has not been the rule, I think, in the second half, especially of 2023. But I remember very much in 2022, um, every time the market was performing too well, the Fed would come out and they would make comments that they knew were going to sink the market because they didn't want the market to move higher because of the wealth effect that the market creates and the implications that that can have on inflation. I don't think that that's the scenario that's happening right now. It seems like the Fed has moved away from doing that. But the worst case scenario is, I mean, it's really hard for them to say that the job stuff isn't moderating in their favor. It's hard for them to say that the inflation is not moderating in their favor also. But they can just really remind the market, hey, our goal is 2%. The economy is strong, so we are pushing forward with our goal of 2%, and we don't care if it makes a little economic damage along the way because our mandate is not necessarily the economy, it's not necessarily the stock market. Our mandate is price stability and healthy labor market. So we think that higher for longer is the better path. We're not even considering rate cuts in 2024 at this time, and then the market quickly has to adjust to that, and we get a sell off in the market. I think that's your worst case scenario if you kind of want best and worst case scenario for this market. I think that now that I said best and worst, let's just let you know what I think. I think that tomorrow is going to be a little bit more of a non-event. I don't think that we're going to get massively dovish comments or massively hawkish comments that are going to necessarily come out of this Fed. I don't think that they're going to sink us down, but I don't think they're necessarily going to say anything that boosts us higher. But I think that I think that a non-event is bullish though, and I still kind of stick by my thought process unless a news event derails it. And honestly, tomorrow PPI and Fed is like pretty much the last major news event from a macroeconomic perspective of this calendar year. As long as we get through tomorrow, and I'm also going to say Thursday because a lot of times the interpretation of the Fed actually comes to fruition in the market on Thursdays, the next day. If we can get through those 2 days unscathed, then I think that this kind of underlying bid that we have in the market will remain. But we'll also see, we've got a big options expiration this week on Friday. So there's we've been in this environment of this very, very, very heavy, long, positive gamma, which has insulated us from these bigger market movements. That should drop off to some degree, I would assume, in the second half of the year. But there's a lot of holiday sessions that are going to be there, and you get your Santa Claus effects potentially, which I think is like the most overused term at the end of the year. I'm so tired of hearing that term, but it doesn't make it necessarily not true. Where again, if we can get through these next couple of days, honestly, that unquenching of gamma, if we see that, which is what I'm expecting, a lot of that to kind of roll off into the beginning of next week, could potentially make the market move up or down faster, but that also includes the potential of up faster. So we'll see. Let's take it one day at a time. I don't want to project out too far, but yeah, good stuff. From Mike Reed, totally off topic, but if I click on the link in YouTube, try out my ProDesk virtual trading floor, $7 for 7 days. It takes me to an order form for a custom blue t-shirt. Ooh, let me check it out. Custom blue t-shirt. Is it a T3 t-shirt? What is this? All right, I appreciate you noticing that, Mike. It's probably been that way for a long time, and no one clicks on it. So, or maybe people do. I'll let the team over here know about it. Thank you. Cool. All right. Well, if there's nothing else, Pat and I have some Jello shots over here that we need to finish on behalf of the company because we don't want them to just sit in the refrigerator for too long. All right. Have a great night, everybody. I'll see you all tomorrow. If you're watching on YouTube, give me that thumbs up. Have a good night.